Hello world, welcome to my channel. My name is Wanai and I talk about money, investing, self-improvement, and anything makes your life better on my channel. Today, I'm going to talk about if you should refinance your mortgage and take advantage of the screaming low interest rate. But before we get there, please know that I am a not licensed, not in real life loan specialist. So please talk to a real loan officer before you make any mortgage related decision. All right, let's get started. We all know that mortgage rate is at all-time low now. So it's natural for people wanting to refinance their existing mortgage to lock in that extremely low interest rate for 30 years or whatever your term is. However, when refinancing, interest rate is not the only factor you need to consider. Of course, everyone wants to pay less in interest. Who doesn't? But depends on where you are in your life. Your goal might be lowering your monthly payment, but for others, they might want to pay off their mortgage ASAP. Maybe they're approaching their retirement and they don't want to have a mortgage payment in their retirement life. In that case, monthly payment might not be on top of their concern. And there's others who wanting to take out money out of their house to have access to cash. So everybody's goal is different. After figuring out exactly what your goal is, communicate that clearly with your mortgage loan officer. And you also should have a basic understanding of how mortgage works. So let's get into my not licensed, not in real life mortgage office. How can I help you today? Oh, I want to refinance my house because my neighbor did it and my coworker did it. And I just found out on Facebook today, my high school friends did it. So I'm gonna do mine. I see. Well, that's a horrible reason to refinance your house. Is it? So how do I know if I should refinance my house? I'm glad you asked. Let me explain. When refinancing your mortgage, other than interest rate, you should also pay close attention to your closing costs. Generally speaking, closing costs range from 2 to 5% of your loan amount. Think it as a trade-off of you getting a lower interest rate. In order for you to find out if it's worth it for you to refinance, all you need to do is to take your total closing costs, divide it by the amount you'll be saving monthly, and that will give you a break-even point. Stay with me. Here comes the example. Let's say your loan amount is $400,000 and your closing cost is 2%. That comes out to be $8,000. And by refinancing, you are saving $200 a month. The math will look like $8,000 divided by $200 by 200, and that comes out to be 40 months, which means in 3 years and 4 months, you will be break even. And if you're planning on staying in this house longer than 3.5 years, it might be worth it for you to refinance. But if you're planning on selling the house in less than 3.5 years, it's not going to be worth it because the amount of saving is less than what you have to pay at closing table. Also, Fannie Mae and Freddie Mac just announced a new COVID tax for all the refi. They're charging a 0.5% fee for lenders to refinance your loan, which means the cost of refi will go up. if you haven't locked your rate by now, you most likely will be affected by this. Make sure you take that into consideration and talk to your mortgage loan officer to get clarification on that. Interesting. What are some other good reasons for people to refinance? Great question. Some common scenario for people to refinance are when your property value goes up. A lot of people didn't have 20% down payment when they purchased their house. So after a couple years with appreciation and paying down their mortgage, they might refinance to get rid of PMI, private mortgage insurance. Second, people refinance to adjust their term. A common one would be shorten their term. So if you have, let's say, 22 years left on your loan, you refinance to a 15 years loan. In that case, you will save a lot of money on interest costs. And also, generally speaking, the interest rate for shorter term loan will be less than a longer term mortgage loan. But like I mentioned before, depends on your situation, people also refinance to extend the term of their loan. For example, if you are getting into retirement, which means your income would be fixed, by extending your mortgage, your monthly payment would be a lot less, which means you're left with extra cash on hand. In your retirement, with a fixed amount of income, if there is any kind of medical emergency, or you simply just wanted to spend a little bit more to enjoy your retirement, refinancing to lower your mortgage payment is a good way for you to do that. In this case, it's going to cost you more on your interest expenses, but it's a better solution for your lifestyle. Number 3, cash out refi. As its name, people take equity from their house to have access to cash. They might use the money to pay off their high interest debt or invest in a rental property. To summarize, you should figure out what your goal is when refinancing your house and how much it will cost you to achieve your goal. Evaluate your situation, talk to a real loan officer, and make the best decision for your financial life. That's all for today. See you next time.